How's it going, financial coaches? This is Pete here. Hey, I wanted to show you another matrix that I put together because I think this might be helpful in understanding what our role is when we get into sessions with participants. Because I think this is actually kind of difficult. There are a lot of different roles that we play as financial coaches, and when we talk about financial coaches, I think we think of things as well. I think we think of our role as wearing multiple hats. And so I wanted to find this fairly decently here before we get started. First of all, financial coaching is on the spectrum or the continuum of financial services. And financial coaching is really about helping people identify what motivates them, their particular goals, how those values determine those goals, how they can best succeed at achieving them, what they have to do to set the right goals and break that down into tasks. And it's really very much pure coaching, like health coaching or life coaching or business coaching, those types of things. It's really trying to help them be self-efficacious, just own the responsibility, own the process of achieving their things. Now, financial coaching, usually when you just speak with financial coaches about it, encompasses a lot of things that are kind of on the periphery of financial coaching, but are distinctly different disciplines. So financial counseling is one of those things that I think we actually do more than we think. And financial educating, explaining what things are, explaining how products work or whatever it might be, defining things or strategies or rules or guidelines or rules of thumb, really. So there are a lot of roles that we play. And then if you think about, getting into the details like financial advisors do, there are lots of different things. And we actually kind of play in some of those sandboxes. We kind of bleed out of them, right? If we really stayed within the curbs of financial coaching all the time, it would probably not feel very natural to the participants and the clients. It would probably feel a little bit too touchy-feely. And when they would ask questions like, how does a Roth IRA work? Well, that's not really financial coaching. That would be more of like financial education, right? And we can do that, but there are different roles. And sometimes it's hard to get people to wrap their heads around it, especially if you go through heavy coaching training. A lot of us are looking for these things of, what motivates you and how have you succeeded in the past when you've reached these impasses. And if you really kind of fall back on just the coaching techniques, the sessions start to feel pretty artificial. They tend to feel formulaic, right? And that's why we can kind of pivot and wear multiple hats in our session. And that's just something that you're going to have to do and learn how to kind of flex between the different roles. And I think as you do it more and more, it's going to make a lot of sense. But I think what helps me and some of the people that start is to understand the differences between those roles. And then figure out what are the signals that are going to help me determine, what role am I playing in the session, if that makes sense. All right. So coaching is very much about kind of helping people discover what's inside of them, right? It's very touchy-feely and it works, right? And helps people uncover those motivations and the impasses and those types of things. Now, counseling, let's kind of go up the financial continuum a little bit here. Counseling tends to be more prescriptive. Okay, so people would come in and, how do I get my interest rate down? Okay, well, here's what you have to do. You're going to have to call your credit card company. You should know how much you can pay towards a minimum if you're going to ask for a payment plan. You should know how long you've been a client. And there's some things we're kind of unloading not only information on them, but we're also unloading usually some tips and tricks of how to go through that process, right? Part of that is financial education. So if we back up a little bit, and I probably should have explained this first, but financial education is just more of kind of explaining how things work. What is an index fund? What is a retirement account? What is payroll deduction? All these things. It's just explaining it, not necessarily recommending it, not necessarily telling people what to do, but it's just bringing that financial information to the fore for them. Now, the other side of it is financial advising, right? On the large end, we're like, hey, here's specifically, this is where I've got my money. What can I do about it, right? And that's really probably a hard stop for most of us. We're not going to have the licenses. We're not going to have the certifications to do that kind of stuff. And so I think when you get to that point, like when they're like, well, I've got this index fund, I was thinking of going into some of these sector funds, what do you think I should pick up, right? Those are pretty obvious signals that for most financial coaches, they're not going to go into that space. So what I've done here, and I've probably given the intro long enough here, is I do have a matrices here and our matrix, and I want to just show it to you because hopefully this helps you as you start getting some signals from people about kind of their comfort level and knowledge level, what role you're going to play most. Okay, so first of all, the thing that I look for is their behaviors, like their pattern of behaviors. And are those behaviors good or bad? Good or poor. Let me give you an example here. If they come in and they're talking about, their spending is out of control, and some people may have different code for that, right? It's just my budget doesn't work at the end of the month and it should. I feel like I make enough money, those types of things, right? It's not that they don't know that their budget doesn't work. They don't really understand what's keeping them from making it work. Sometimes these may be things like, listen, my parents have told me I should set up a retirement account. I just never have done it, right? These may be things that indicate like the poor behaviors, maybe the lack of motivation, maybe the lack of discipline, the lack of will. On the other hand, people may say, hey, I've been saving for a long time. I'm putting money away. I'm trying to figure out what I'm going to do with it, right? So now we know that maybe their budget is right sized. Maybe they don't have a spending problem. Maybe they have kind of done all the things that they know they should do just because they have enough information that they've seen people do it or they've been told to do it and they can do it, right? The behavior is not an issue. The next thing that I want to know is how much financial knowledge do they have, right? And is the financial knowledge that they have a large amount of financial knowledge, or is it a small amount of financial knowledge? Because definitely people can have different amounts of knowledge depending where they come from. Some people will study finance in school, and so they'll have a very good grasp of that. Some people will come from a family where their parents really instilled money management in them. Some of these people will just dive into it and listen to a lot of podcasts and read a lot, right? So they'll know what a Roth IRA is, or a mega Roth, or backdoor Roths, and compound interest, and they may know all these different things, right? They may maybe not fully understand them, but they've heard about it because they've kind of loaded themselves up with it. On the flip side, and probably more common, most people don't have a lot of financial information, especially when you're younger, you're starting out your career. It's just one of the things that is not important as much as it is to kind of work on your own career and start a family and buy your first house and some of these things, right? So they don't understand what makes up a credit score, or I'm not sure what the match on my 401k is. I don't know what a target date fund is. That's all right? So what I really want to gauge are two things. How do I see their behavior? Is their behavior under control, like that they've got that down cold, or do we need to work on that? And their financial knowledge, do they have a lot of it? Do we have a really kind of similar starting place where we're working on and building on, or is their financial knowledge lacking? And I think this really helps determine what role we're going to play. So let me start with behaviors. Let me start with good behaviors and low financial knowledge. Now, I will give you an example of this. So I was working with someone, and he called me, and we were talking, and he's saving a decent amount of money. They were saving 20 or 30% of their paychecks. They were just putting it in a savings account, right? They weren't living above their means. They were buying used cars. They were not subscribing to a lot of services or gyms or anything like that. And they were finding cheap ways to go on vacation, right? So they had really good behaviors. They, right out of the gate, were starting life off in a pretty good spot. What they didn't know is, should they do their retirement account at work? They know that there's something available. Should they set up a health savings account? Should they be on a higher deductible insurance plan, right? They shouldn't know these things. People in their early 20s probably won't know about these things. And so this was a great opportunity because, there was a lot of opportunity to start doing stuff with this person because they could put money into retirement and not necessarily freak out because there wasn't as much in their savings. They could figure out how to save even more money hacks and shopping smart and things like that, and even get their savings rate up. So it was really about bringing new ideas and educating them on some of the tools that they had and some of the accounts and some of the products out there. So it was so that they could make a good decision, right? What they needed was more information, and they were really empowered to make good decisions. And when you do that for these types of people with good behaviors, they can take their savings rate from 20, 30% to 40 or 50%. They can figure out how to save more money. They can be fine with putting more money away into a Roth IRA or whatever it is, right? So really we're playing the educator role, right? I don't have to do as much coaching here because they don't need the coaching. They are well motivated. I don't have to do much counseling here and just tell them what to do, because as they get the information, as they gather it, they will think on it and make good decisions for themselves, if that makes sense. So we're playing a financial educator role. Let's go to the next quadrant over here. Now let's look at their behaviors. The behaviors are probably poor, and their financial knowledge is relatively poor. And what we're going to be doing here in most cases, and I say 80% of the time, because you're going to switch hats, you're going to play different roles. In every session, you're going to kind of pivot between kind of roles you're playing. But this is really where you're going to be doing counseling, in my opinion, because you're going to have to address the behaviors, but you're also going to have to add information. And this is what I would call that example, like a credit card example. Hey, I've maxed out my credit card. I can't charge anything on it. I can't pay the minimum payment even. What should I do? And they want to do something, they just don't know what to do. But underlying, we have some issues as well. We need to figure out what we're doing about the spending. We need to figure out what caused this, right? So spending obviously can be a big one, but it can also just be working with between spouses, right? It can be someone who doesn't spend a lot, but maybe their spouse does, and so net the behavior looks bad, but maybe one spouse doesn't have that, but he or she doesn't have the financial knowledge or the strategies to go and start that conversation. So in this case, we say, listen, hey, here are some fire starters for having this conversation. Here are some questions that we can ask just to see, like, are you guys on the same page? In one case, I could give an exercise and be like, here's a little questionnaire. It's just a little fun test that you guys can take. And there are questions, and then I want you to write the answers on a pad of paper individually and then compare them. And it's good for a laugh. But what those do are help us figure out, where are we disconnected? Where are the goals not aligned? And I bring that up because these are situations where I'm telling them what I need them to do next. And that's very much a counselor role. That's very much prescriptive about, hey, I'm not asking you what you think you should do next. You're asking me what I think you should do. You're open to that, and I'm going to tell you what I think you should do. So this is very much a counselor role. So often they don't have the information, and I can't just dump the information and expect them to make good decisions like we can with the good behavior people. I'm going to give them information, but I'm also going to try to contextualize it for them. I'm going to give them next steps, because what we don't want to do is necessarily set them on their own until we can kind of get them to understand why we're doing it, right? So this is the counselor role. Low financial knowledge, poor behaviors. All right, so let's go up a quadrant here, and we're talking about behaviors are still poor, right? Maybe it's spending issues, maybe it's relationship issues, maybe it is just taking action on something, right? Sitting on your hands and not starting that business, or not going for the promotion, or not, going to the additional training or whatever to better yourself, whatever. But the financial information is pretty high. They're familiar, maybe they grew up with it, they read a lot, they read Barron's and the Wall Street Journal, watch CNBC or whatever it might be, right? So they have good information, they just haven't taken action on it. And this is really where the coaching comes into play. This is really where you are going to go to more pure coaching. You're going to help them figure out, like, what's the motivation? You say you should do some things, but why do you think you should do that? Is it just to please someone else, or do you want to do it for yourself? And, if you're not doing some of these things, what's the holdup? Like, is it fear of the unknown? Is it fear of taking action? Do you just not want to do it? Are you afraid of self-sabotaging and failing? Are you afraid that your friends are going to make fun of you? Whatever it might be, right? Like, what are those things? This is where we really go into those pure coaching exercises, because it's not a knowledge gap. They know in their head that they should do it, but they aren't really internalizing in their heart. They aren't really feeling it. They aren't manifesting it and saying, hey, I'm going to do something right now. And so this is really a place where we can help them figure out, how do we take that knowledge, that head knowledge, and turn it into action? And this is a much more pure coaching. Now, there may be things where we say, again, educating, hey, maybe you're not doing budgeting because it's just too hard. You don't want to do a spreadsheet. Well, maybe we can just do it with an app and connect it to your credit card and have it just kind of do the logic. Okay, great. So we're doing some educating here too. We're saying, hey, what about this app? Maybe that's the problem. It's just too much work, and so you're just avoiding it overall. But if we can simplify it, maybe that'll get you over the hurdle. And then say, yeah, I've wanted to budget, but I just don't want to do it manually. Okay, right. So obviously we're going to play an educator there too, but this is really mostly about pure coaching. Now, the last quadrant, I'm just going to put this in here, but I put it in gray because this is not something we're going to do. Like I said, for most of us, the curbs are going to be gone. For me, I had licenses, 7 and 66, and I had certifications in advising, so I have done that in that world and been licensed to it. But usually what we're going to do is, if people are there, good behaviors and good financial knowledge, right? They're savers, they have good jobs, they maybe have a business and they're very diligent about it, and they live below their means and they know what they're doing. And it's really a case of, what more can I do with my assets? How do I figure out how to adjust my assets to my changing risk profile, or how do I use a separately managed account for my assets, or should I be thinking about muni bond funds? These are very common types of questions in this advising world. Good behaviors, good financial knowledge, right? They need much more specific guidance, right? They need much more hand-holding. They often will hire an advisor to offload these decisions because this is the kind of detail they need. They need actually people looking at individual investments, looking at specifics on their financial plan, and making recommendations that are suitable in that case. And again, so that's pretty far outside of our repertoire here, but I put it in there because it still fits part of the matrix. And if you are doing some of this, maybe you're a CFP and you do contract out for this, or you're a fee-only advisor or something like that, or maybe you have a good referral source, this is a good indication, good behaviors, high financial knowledge, that maybe you want to refer them out to there. All right, now I'm going to add another dimension to this matrix because I think this can help a little bit in terms of how you think about scheduling and kind of how your business model works, like engagements. So I break this up here, periodic engagements. So if they are good with their behaviors and they just need more information, more ideas, how do I set up that retirement account, right? You probably don't need to check in with them a lot because they'll probably take that information and go do it. They've got good behaviors. They just need you to fill that information gap, right? And if they have good behaviors and low information, right, they'll do that when you supplement their knowledge. And again, if they have good behaviors and good financial knowledge, again, you probably don't need to meet with them that often. Financial advisors probably meet with their clients, I'd call it probably twice a year, for the longer term. Some will meet once a quarter, some will meet a couple times a year, and maybe once virtually or things like that. But it's not something where you're meeting monthly or even weekly. Now, the engagements that are much more frequent are when the behaviors are poor. So if you think about that, poor behaviors, low financial knowledge, they're counseling, they're trying to solve a problem, keep the lights on, put food on the table, whatever, fix a car that's broken. They are looking for specific guidance, specific action right now, and they want to know, hey, I am willing to do it. Please tell me what to do. This is a counselor role, and you probably, one, need to tell them what to do, but then maybe check up on them because maybe their commitment to doing it or getting it done or being timely or urgent about it may not quite be there. So a lot of times this is where I'm working with people and saying, hey, this is what you should probably do. You should do it tomorrow. Why don't we speak the day after tomorrow, if that makes sense? So you're doing more frequent engagements. That probably won't last long, or sometimes not for more than a few weeks or more than a few sessions, but this is probably where you're going to have more frequent engagements. And again, poor behaviors and even high financial knowledge, they know what they should do, right? They know they should start that retirement account. They're not doing it. And again, this is where you're going to do more peer coaching. But after that session, you're probably going to end up being more of an accountability partner in the short run, right? Did you do something on it, right? What are we doing, together here? What are you doing to move the ball down the field? Did you do it? And again, you can't be the accountability partner with high frequency forever, but sometimes we just need to do this to help set a pattern of success, a pattern of accomplishment that they can believe in their own capabilities to do this in the future. So again, go watch my video on, is your business model flexible? When you have people come in, good behaviors versus bad behaviors, this often is a situation where it's all right, we'll meet once a month on the good behavior side. On the poor behaviors, maybe we need to meet every week. Maybe we need to meet 3 days from now. And so you want to think about that too, because you don't want to necessarily just meet as your business model dictates. You want to meet as the client's needs are dictating, if that makes sense. So hopefully this little matrix was helpful. I just put it together basically because I think a lot of coaches struggle when they see some of these things, what role am I playing? And you kind of weave, and to the client and the participant, it can feel awkward, forced, and maybe borderline inappropriate or irrelevant if we're not kind of playing to their needs. And really, behaviors and financial knowledge are really two big signals that I look for, and that really helps me determine what's going to be the best value for that client. So hopefully that helps, and I will look forward to catching up with you in another video. See you later.